So is Bend a good market to go ahead and target, or one that's up now and won't stick around? As discussed in the last episode, the supply has not increased to meet the exceeding demand in Bend yet. But with any market cycle, this will eventually balance out, causing supply to increase and prices to decrease. And therefore, I think buying an existing build in Bend is a bad investment. Therefore, I wouldn't even considering investing in Bend unless I'm buying a plot of land and developing on it. So what kind of plots of land should I be looking for? Well, let's get into that. So if you remember from episode 1, 100 acres was added to the city's UGB. So when looking at places that will appreciate in the long term, that area is probably a good place to start. And sure enough, there's a reasonably priced 2-acre plot of land right there next to that zone. What has caused this population growth? Looking through this, the one thing that really pops out is remote work and tech migration. A lot of people leaving big cities on the West Coast to more rural areas where cost of living is cheaper and such. But with return to office, I do not think this is something you can depend on long term. And I would not want to invest in a place where one of the primary reasons of population growth is remote work, because a lot of those people are going to be forcefully by their companies migrating back to San Francisco, Seattle, those kinds of places. Retiree destination portion of this section is the one avenue where I think there's real potential, because it seems like there's the infrastructure built, there's the nature, the golf courses, the safeness that retirees would love, plus the land and demand that would warrant building up these communities. Let's break down how we can make this idea into a cash cow in the next segment.